clear. Here we are, SMF MMTs. I've got a monthly chart on the Dow Jones, and this is what it looks like on a monthly. Now, we were 94% overbought, and we were still running at 93.43%. It's on the stockmarketfunding.com website. Go put in the search box. Look at all the Dow. Look at that big haircut. It's a double month reversal. Now, we've had other double month reversals, but this was early in the bull cycle. This double month reversal is late in the bull cycle of the 2-year cycle. We still remain overbought on a monthly level. Now, let's break it down, MMTs. Let's break it down to the weekly top that we called right here, MMTs, at 93.11%. I'm sorry. We said we were going to go down, and the short side of the market would pay. And we're below weekly moving averages. Now, on the Dow, you technically have 1 week, 2 weeks below it. It doesn't qualify a bear trend until you roll over and go down in value in that blue line. That's that 10-week moving average. And it crosses over the 20. You can go up and test it and then roll over and make a lower low, and we specialize in those longer term trends. But since the rally has started on a weekly level, these moving averages in every dip were elevated to the high side, and that's why we would make higher highs. That's why the first reversal in the year was to make another higher high, as we said in those. And we covered our shorts, and we bounced off the 20-week. You are below the 20-week moving average. You are also in the current phase, MMTs, is that you're at 56.54% DES versus the top reversal MMTs up here, MMTs, at 93% overbought. So we're not nearly as overbought in the cycle. Now, having said all of that, MMTs, what I am going to do is show you in the shorter time cycle of volatility is that 200-day simple moving average is down here. That 200-day simple moving average, MMTs, and let me tell you about short-term volatility, is that short-term now, MMTs, we're oversold. We are in oversold daily chart category, 6.73%. Now, MMTs, let's be mindful and go back over here to the top of the rally, MMTs. That was 93.22% on a daily now. A daily is different than a weekly and monthly. Remember that short-term oversold has bounces, MMTs, and we're at 6.73% on the daily, so MMTs, short-term oversold. Short-term oversold. Now, MMTs, just like when exuberance is in play, you can stay oversold for a period of time just like you can overbought. They work both ways. However, the upside is going to be where the 100-day simple moving average has been violated. The white line was when we said we broke below the 50-day simple moving average, you would see a lot more selling. And 5 weeks have gone by, MMTs, and that every one of these daily counter trend. So you start the reversal, counter trend, you make a lower low than that low. You bounce, and you make a lower low here than that low, MMTs, and you had a 4-day rally, and you've made lower lows than these lows, MMTs. That 200-day simple moving average is what we'll be looking at. That number, MMTs, is 11,667. Now, let me pause the tape, MMTs. Now, MMTs, it's very important for us to know on the Dow that we're at the double top breakout. And this was a double top breakout. That was very important. That when we came off that selling over here, and we were down here at this lower level, is one thing I want you to know, MMTs, is that we burned that clutch. And see the double top right here? That's this phase, and that's this double top. This is called a double top. We broke out, made all-time highs, pulled back out. We made another all-time high. So when we took out that resistance line at another double top and we made the peak, that was a kiss goodbye. And so far, the nature of the reversal that we said would happen has done everything. And we're right there, MMTs, and this major support line, short term, we are oversold. But now let me explain something to you. Even though that we're short term oversold, we can get a little bit more oversold. But people are going to start buying this S&P and the leaderships, I'm sorry, in the Dow, and they will in the S&P. So basically the 200-day moving average is down here. This is a critical mass make or break. That double top is going to see tomorrow if this thing starts to sell through where resistance was taken out and the support level at old resistance becomes new standard support level between the buyer and the seller, because that's how they operate in standard technical analysis and the big money makes decisions, MMT. If we break it, we sell harder, and the next level for the standard technical analysis is going to be here, MMT. It's going to be the first double little top right here where it created the daily buy signal. And then it took out that little double top, and we reversed and made higher highs, and that's how indexes and bull rallies work. Right now, the bull rally reversal is short-term oversold, but once again, MMTs, let us be clear that this very same neckline right here, this is a neckline right here, and we undercut it, but we never ever sold below the weekly and moving averages, and we are here. So the major neckline on a weekly is where the same weekly double top breakout. So let's be defining that. That's this and that's this right here. These two areas right there. That's called a double top. And basically we broke through it on a weekly and we made an all-time high from short-term weekly reversal in the year 2010. When we got into 2011, though, we are above those double tops, and we burned to the first correction that we called. That's this one. Then we put off that blow-off top on the high. Now, MMTs, I've always told you that, just like I said back 6 weeks ago, that the second reversal in the year, at midpoint of the year, would be longer than the first reversal. That only lasted a little ways, and it bounced off the moving averages immediately. This reversal is longer than reversal 1. So reversal 1, MMTs, and we blew off the top, and it was time to get long, and bull rally was still good and hard. Now, MMTs, on this Dow, I got to tell you that 20-week moving average is a test of resistance, and so is a 10. And the thing about it is, you get counter rallies from short-term oversold markets, they pop back in there, and then they roll over again. If we break the neckline, though, then we're going to come down to that 50-week moving average right here, and that's at about 11,488, which is below the 50-week. Is now that 200-week is about 200 handles higher than that weekly, this daily 200-day simple moving average MMT. So basically, when we break key support levels that used to be old resistance and they don't hold it, they have a tendency of selling on down, MMTs, and they will. And once again, there is the weekly recap. It is considered a stage 1 reversal that the markets have not experienced below their key weekly moving averages from this long-term correction to the current right there, MMT. Bear move.